Seiler Wealth Management video blog. I am Lee Seiler. I am the CEO of Seiler Wealth Management. We are a registered investment advisor, and I hope everybody caught a replay of the video we posted last week, which is a piece that I put out right after the market actually took a big hit on that Friday, dropping 600 and 300 on that following Monday. So I put a video out there on that Tuesday discussing that this is an event. Usually event-driven stock market drops typically recover a little more quickly, and I probably didn't use those words, but basically that's what I said, and I thought it was an opportunity. And yes, we did do some buying. We did a lot of small cap buying. We did some biotech buying. We did some things that I could buy Google very, very cheap. So there are things out there that we thought were opportunities, and now let's fast forward 3 weeks, and it's all worked out very well. Now, look, what do we think? Do we think the market's going to go up from here? I tend to think that we're stretched valuation-wise. The only way that the market can inch a little higher right now is that we have a good, solid earnings season, which we have started. Earnings season started last week. Early on the week, pretty good numbers. The banks came out with pretty good numbers, beating expectation, and that despite a low interest rate environment. In fact, a declining interest rate environment. Banks do better when rates are going up, not going down. So, needless to say, the big banks out there, Citigroup, JP Morgan, Bank of America, all beat on their estimates for revenues and earnings. Wells Fargo came in less than expected, and that's the one stock that suffered a little bit, but actually it's recovered since the earnings report. So things are looking pretty good on that front. Then we had a disappointment last night. We had Netflix come out. They disappointed the street. They missed earnings estimates, and they basically blame it on they didn't have the subscriber growth they were expecting, which, okay, we got it. Competition's there. They say it's not the competition, but I believe it is. Now, let's talk about a couple of things, and I just want to go over, the market just recently hit an all-time high. That was over the last couple of weeks. Now, between all-time highs, being the previous all-time high, I'm going to give you some numbers. It was 414 calendar days between the May 2015 high and the recent high of a few weeks ago. Now, basically, that's market churning for 19 months or so. All right, really not doing anything in a very narrow range. However, since 1929, this has happened 24 times, where it's taken more than 300 days for the market to hit a new high. Now, in those times, and this is pretty interesting, in those times, the forward return after has been much stronger. In fact, 250 days out, after they hitting the new high, the market has averaged 15.6%. That's the average return, 15.6%. So, let me make sure you understand. It has taken 414 days for the market to hit a new all-time high. It's happened 24 times where it's taken 300 days or more than a year, to exceed the previous all-time high. In those 24 times, 250 days after the all-time high, the market's up 15.6%. In fact, the market is up 91% of the time when that happens. In fact, I think it was like 2 instances it did not happen. So that's pretty interesting. Now, look, and anytime markets hit all-time highs, valuations get stretched. That's just the way it is. The question is, valuations are stretched, the earnings need to catch up. So we'll see how that plays out going forward. Now, let's talk about this Pokemon Go phenomenon, okay? Wow. If you take a look at the stock Nintendo, ticker symbol NTDOY, Nintendo, NTDOY, which is a stock that I would never buy. And of course, that's brilliant because the stock, I'm trying to pull it up, the stock closed yesterday at $37.37. All right, $37.37. 2 weeks ago, it was $17 and change. This stock has doubled in, call it, less than 2 weeks. Now, for those of you who think that this buy on Nintendo, if you went out and bought it, it'd be easy money, I would say this, that this thing is up on air right now. This Pokemon Go phenomenon will go away. This is a fad because the fact of the matter is, let's go next month, and see how their data plans are. They're exceeding their data plans, and people are saying, I'm not going to pay an extra $100, $80 for data to play this stupid game. It is a stupid game, by the way. I don't even understand it, but I cannot believe that this is happening. Needless to say, Nintendo stock has been tremendous. Now, look, I'm not a brave enough man to go out and short that stock. And of course, shorting means you want to take advantage on the downside because stocks like this can go up further. But it is a crapshoot. This is a typical throwing dart scenario. Who knows if it goes up or down, but I think it's going to end badly. I just don't want to be the last guy in, because you're the last guy in, you can literally lose half your money. Literally half your money. So I've got a lot of people asking me about the stock. That's why I bring it up. I wouldn't buy it. Okay? I'm just telling you, I wouldn't buy it. If you did buy it, you make sure you put a really tight leash on it and say, I'm going to buy it at $38. If it drops to $35, I'm out. But I wouldn't touch it. Okay? And it's probably going to go higher. I mean, it went higher yesterday. It was up almost $4 yesterday to 37 and change. All right? Anyway, we are going to do a Stock Investing 101 webinar that is coming up on Thursday, July 28th. It's going to be a webinar, so you can do it from the comforts of your own home. We will send out the link, and this is going to be, I got to tell you, for novice investors, people who just don't do it or have somebody else investing their money. You want to know some of the basics, and I'm really going to focus it on the teenagers and college kids, because they're not teaching this in college. So it's going to be a webinar starting at 6:30, the comforts of your own home, on Thursday. That's a week from this Thursday, July 28th. So take advantage of that. It's going to take maybe 45 minutes. We'll get through it, and we'll have some question and answer. So it'll be great. So we're going to try doing the webinar side and see if we can help people out. Because I know a lot of people want to come to our events, and they say, "Well, I can't make it there." So let's try a webinar. We'll do a few of those and see how they work out. All right. Thank you very much for joining me. And by the way, this whole presentation is copywritten. So please do not try and plagiarize what I'm saying today. All right? I'm S.O.S Wealth Management. Listen, we want to work with people that we like. So if you're looking for a financial advisor, come on in the office, but there's an interview process, and we want to make sure we like you. You know, we're not out there shotgunning for clients. We're out there rifling, and the clients we want are the people we believe we can enjoy working with over the next 10, 15, 20 years. So that being said, if you're a jerk, don't bother calling us. No, if you're a nice guy, nice family, nice lady, give us a call. We'll talk about it. We'll have a get-together. And we do have our second opinion service, S.O.S. If you have a portfolio out there, whether it's an annuity, because annuities have changed. And right now, there's an annuity out there that's phenomenal, low fees and liquid, which annuities aren't liquid. So that's a good thing to take a look at. Or if you have an investment portfolio, whether it's one of the big houses, and we're getting a lot of accounts from the Bank of America, Merrill Lynch's of the world, Morgan Stanley's. Those are easy because they don't do much. Anyway, thank you very much. I'm Lee Seiler. I enjoyed putting these together for you. I hope you share them with your friends, and don't forget our webinar. We'll get that link out to you. Also, newsletter came out yesterday, so please look in your inboxes. If you want to join the newsletter, go to the website, stockdr.com. Great stuff on there, stockdr.com. Again, I will talk to you soon. Give us a call, 407-830-8002. Thanks. Have a great day.